Right now, all across the country, people are starting to see their insurance rates rise for just about everything, for health insurance, for car insurance, homeowners insurance, renters insurance. Pretty much any type of insurance you need is going up in cost. And it's getting to the point where a lot of people just can't afford to pay for it, guys. And you know, I have several accounts here I want to share with you about people's insurance going up to just show you how drastic this can be. One message I constantly keep getting from a lot of people, like, oh, you're just trying to scare people, like that's not happening where I live. Like, well, that's a very cocky thing to say, because you don't know when or if something like this can happen where you live. So to just sit there and say that, oh, it's not happening where I live and everything is fine and dandy, is a pretty ignorant thing to say. So here's a guy that lives in North Carolina, okay? Never filed an insurance claim. And his house, he's not near the coast, or he's not near a fire-prone forest. So, you know, very low hazard area, all right? So his homeowner's insurance went up to $1,600 for the year, which is still very cheap by Florida standards. I'm sure a lot of people in Florida would love to have a $1,600 per year premium. But here's the problem, guys. Before, the bill was only $900 a year. Now it's $1,600 a year. So $700 increase, just like that. And this guy says, well, listen, I don't really make a ton of extra money, so it's gonna be tough for me to pay for this. And it's already on the brink of unaffordability for me. So, you know, that just goes to show you how different also people's lives can be, right? You have a guy in North Carolina whose insurance premium is $1,600 per year, which people in Florida would kill to have that figure. You know, I definitely would. I would love if my insurance bill was only $1,600 a year. And then on the other side of the spectrum, you got guys like this that are like, this is making it unaffordable for me. And so that's the point I'm trying to make here, guys. Like, just because something doesn't happen to you, or you're not seeing it happen in your neighborhood, doesn't mean it's not happening to others. And it doesn't mean just because you're doing well in life that everybody can afford these type of increases. You have another guy here, his auto insurance bill just went up by $600 per year. And both him and his wife work from home, so they don't even have a commute anymore. So they barely drive the car, but yet the insurance bill's going up $600 a year. He's over in Virginia. You know, these are not places in Florida, guys, and I'm hearing stories about all over the country. So far, I've heard stories from Virginia, North Carolina, South Carolina, Georgia, Florida, Louisiana, Colorado, Missouri, Oklahoma, Arizona, Utah, California. Like, where's next, guys? Pretty much all the states are gonna be getting hit with an increase at some point. Those are just the ones I can think of off the top of my head that people have written into me saying that their insurance has gone up. And insurance companies claim that they are losing big right now. They're saying that for every dollar that was collected in claims over the past couple of years, they paid out $1.10 in claims. So basically, they're crying that they're not making the money. But once again, you continue to see these companies turn sizable profits and give their CEOs big bonuses. So it's kind of hard for me to believe that they really are not turning a profit. But what it all comes down to is a lot of these insurance companies, I think all of them really, are publicly traded companies. And when you have a publicly traded company, they have one obligation, and that is to make their shareholders money. If they don't do that, they will go out of business.
Here we have a house for sale for $1.4 million, and it's a new listing, so we don't know if it's going to sell or what the price is going to be. Property tax bill $6,000 a year, so not bad, but he bought it back in 2006, and I want to show you some of the history of this house, because this guy has actually took out a lot of loans against this property throughout time, but he's also paid them all off. And the reason I want to bring this up is because when you look at the history of this borrower, you can see how many different mortgages and home equity lines of credit this guy has had, but he's paid them all off and been responsible. Whatever he did with the money is his business. But that just goes to show you guys, like, people borrow against their houses a lot more than people think. Now, this guy was responsible, paid it all off. But if something happens to you and you're not able to pay that off for whatever reason, they take your house. It is something I warn about a lot on this channel. And I'm glad we saw a real life example here of how much people actually do this. That's a lot of loans against one property in the span of like 16 years.
So without really getting into a lot more detail of why, the insurance premiums have gone up, they say everything from climate change to a bunch of different storms we had over the past couple of years to inflation, and maybe some of those reasons are legitimate, maybe they're not. It doesn't really matter. What really matters is the price of insurance is going up too high to the point where a lot of people can't afford to pay it. I get people saying, oh, this guy doesn't know how insurance works because, state regulators have to approve these insurance increases. Like, yeah, well, guess what, guys? Just because insurance is regulated by the state doesn't mean that these rate hikes don't get approved, because they do get approved all the time, and that's why you're seeing these increased rates, because they're getting approval to increase your rate. It's really that simple. Here's basically how this works, guys. Insurance companies have a lot of pricing power. State regulators do have the power to limit how high those rates can go, but generally insurance companies get their ways, whether it's through lobbying, whether it's through behind the scenes payoffs or underground handshakes, whatever it is, it doesn't really matter either, because the only thing that matters is that the rate's actually going up. And our crooked politicians are allowing it to happen. But they're kind of being blackmailed into doing, even if nothing nefarious is going on under the table. They say nobody's getting a payout from this, okay? Everybody's above board, which is highly unlikely. But let's say that that's the case, right? The insurance companies still have the leverage. You know why? Because if the state regulators don't approve these increases in insurance for people, then the insurance companies will simply stop writing policies in the state, which is something that they should all not be allowed to do anymore. These insurance companies, if you're going to be offering insurance in a state, you should have to commit to it. Like, you can't just drop out because you're not getting the price you want to get.
Here we have a house just a little bit down the street, and they want almost an extra $400,000, and the house is only about 200 square feet bigger. And you can see this is a long laundry list of a hot potato property here. They bought it back in 2021 for $960,000. Tried selling it for all different price points, up to $1.65 million, $1.9 million, $1.78 million. They put it up for rent for $11,500. They're all over the place, and nothing's selling. They're not renting it or selling it. And the property tax bill here is pretty severe at $23,000 per year.
Wow, check out all these old cars, guys. This is unexpected find here on the walk. Lots of classics here. Very cool. I dig that Camaro Z28. Super cool. Now, I fully understand that these insurance companies are private companies and they can do what they choose, right? They can offer policies where they want and not offer them where they don't want. So basically, these insurance companies, they're bullying the state lawmakers and just threatening to leave, okay? And maybe what they should do, maybe all the states should band together and say, you know what? We're all gonna say no to your increases, and then these insurance companies will be forced to pull out of everywhere, and then they're gonna go out of business anyways because they're not gonna have any customers left. I think that's the only way to fight back at them and play their game, is give them a taste of their own medicine. Like, okay, yeah, you guys are not allowed to raise prices here. You don't want to do it? Fine. Well, you're not going to be able to do it in all 50 states. So how about that? And naturally, you're going to get insurance companies that don't want to go out of business and are going to have to start cutting back on the amount of bonuses and the amount of profits that these insurance companies are making in order to stay in business, if they want to stay in business at all. I feel like that's the only way to fight back against these guys. Like, people ask me all the time, like, hey, you talk about all this stuff, Michael, but what can be done? Well, that's my idea of what can be done. But the problem is, it's up to each individual state regulator to do this. So even if 10 states started banding together and saying no to these increases, you still have 40 other ones that might say yes. And I don't know if you guys can tell, but the running theme here with a lot of these big changes that need to happen in general with our economy, with real estate, with insurance, they all rely on group efforts, okay? Which is something that we don't have anymore in this country, it seems like. Because a group effort started this country, a group effort escaped the tyranny of Europe and paying taxes and all of this, And now we're right back to square one, getting raped with taxes once again, getting raped with these insurance premiums. All this stuff is just insane, and we're just taking it. And really, guys, you can shop around still. There is still, some value in shopping around to try to find a better rate. But these days, it's no longer a guarantee that you're gonna find a better rate by shopping around. It's just a maybe. It's worth a try, but don't expect big results by shopping around, unless you just get lucky. Because the reality is, the competition is continuing to shrink. And chances are, if you live in an area where insurance premiums are exploding, that means competition is starting to weaken. And even if there is still a lot of insurance companies in the area, you can rest assured that all of them are performing these big increases, not just the one that you're with right now. Here's what an insurance agent says whenever they ask you, what can you do about this? Check out the answer. She goes, you need insurance. You can't have a vehicle or a house without it. So you have to pay for it. And you can figure out where you can cut other things in your life to make sure you can drive around. So that's the advice, guys. Just lower your budget, no big deal. I just love when I hear things like this because, while that might be possible for some people, it's definitely not possible for everyone, especially if you're already tight with money and your budget is already kind of maxed out. What are you gonna do? But I'm telling you right now, guys, you do have to pay for it, because I have two cars. I have an old Camaro and I have a new Jeep. And I canceled the insurance on the old Camaro temporarily because I'm trying to sell the car, by the way. If anybody wants to buy my Camaro out there, let me know. Shoot me an email. I'll sell you the car if you're willing to pay the price. It's a nice car. It's just, I don't have the time or the bandwidth to maintain it anymore because it's an older car and it requires more maintenance than a new car. And I just don't have time for it, guys. So it's time to let it go. But I canceled the insurance for just a couple weeks, right? Because I was just gonna let it sit in my dad's garage. Currently I have it with my dad. I don't have it here in Miami anymore because all sorts of reasons I'm not gonna get into here. I got a letter in the mail from the state of Florida saying, listen, if you don't start putting insurance on this car again, if you don't send us proof of that you have insurance on the car within the next 14 days, we're gonna suspend your driver's license. And I was surprised that that's the case, because it's not like I don't have insurance. I still have insurance on my Jeep, the car that I drive around. So the only option for me would be to surrender the license plates, and then I wouldn't have to pay for insurance anymore, or to get insurance. And I'm not going to surrender the plate because I still need to have the car be drivable and still go on the road sometimes. If my dad needs to drive it and get it out there and keep it running, or if somebody needs to test drive it, whatever, it needs to have a license plate still. And while we're on insurance, I want to talk about insurance here in Miami because, a lot of people keep talking about how is it possible that Miami can continue to go up in value. We see the home prices here continue to rise, not at the clip that it was before, but still, right now it's up 6-7% year over year as of the most recent figures, which is still a lot compared to most markets, especially when you see a bunch of them are starting to go negative already. But people keep saying, how are these prices continuing to go up when the expense of maintaining these homes is getting so high? You have the property taxes here in Miami completely out of control, guys. I've showed you guys numerous examples, which you're even gonna see in this video too. Then you combine with the insurance. The insurance this is probably the most expensive area to have insurance in the whole state of Florida. Just the average premium for somebody in Florida is about $6,000 a year right now, which is why I was saying earlier, anybody in Florida would be begging to have that $1,600 a year like that guy in North Carolina. But here in Miami-Dade County, for example, the average premium for a single family home is at $6,000 a year. Same thing in Broward County, it's about $6,000 a year. Same thing in Palm Beach County. So all over South Florida, you're looking at least $6,000 a year. And that's for an average home that's not right on the water or, right near a hazard, basically. I've seen other people's premiums here go up past, $15,000 a year, if not higher. But here's the answer, guys, which has always been the key to Miami's housing market in general. A lot of these people that are buying these homes are paying cash. And guess what you don't need to have when you pay cash? That's right, homeowners insurance, no longer a requirement. So a lot of these people that are buying these homes are just risking it. They're just taking the chance that nothing's gonna happen and they're not gonna need it. And honestly, I can't say I blame them, guys. I'm walking through Keystone Point right now. It's a really nice neighborhood. I wouldn't say this area is in too big a danger of anything. Yeah, if a major hurricane rips right through here, you're going to see a lot of damage from these trees and, wind damage, but probably not a lot of flooding, most likely. There could be some, but, if you're looking at paying $10,000, $15,000 a year for an insurance premium for a house over here, I would probably go without it too, because it's very expensive. And even if you get some major damage from a storm, say it costs $30,000, $40,000 to fix, that's only a few years worth of insurance premiums. If you can afford to pay cash for a house, the logic goes, then you can probably afford, repairing the house in the event that something major happens to it, is the train of thought here. The risk assessors that work for the insurance companies think that everybody here is crazy, because they're saying that by 2050, Miami-Dade County is supposedly going to be averaging $988 million in annual property losses due to severe climate change. I don't know, guys. I'm not going to get into the whole climate change argument with you guys, but let's just say I've lived here for 16 years now. I've seen very few events happen that have been really damaging to a lot of the property here. Like, there has been some things. We had Hurricane Irma in 2017, caused a lot of problems. We've had some of these smaller storms, cause some damage, but nothing catastrophic, okay? And that's over a 16-year period. Not saying it can't happen, just saying it hasn't happened since I've been here. But guys, if you think it's just Miami that's gonna get hit with these crazy increases, it's not, because look at this. From a report that was released last September by First Street, they're a New York City-based research firm. They estimated that about 39 million homes across the country have policies that are underpriced for climate risk. So whether you believe in climate change or not, once again, it doesn't matter, because insurance companies do, and they are pricing your insurance as if you're going to have problems. If they think that where you live is risky and you might have issues, that's being priced in right now. One of my viewers, Miguel, he wrote me an email recently, and he says that he lives in California. He used to have farmer's insurance, right? They sent out all these letters saying that they're not renewing his homeowner's insurance and many other people's. So he called his insurance agent, which he said that his insurance agent should have called him proactively, by the way, to let him know about this, which they did not. So that's something messed up right there. No heads up from the insurance agent. And basically his insurance agent says, you know what, it's tough because everybody has the same problem right now, and they're not even trying to help anybody. They're not trying to help them get new insurance or anything. They're just saying, tough luck, pay up. So he said he had to call dozens of other insurance agents, okay, to try to get new insurance. And he said they actually had condescending attitudes that made him sound like he was guilty of something, like he did something wrong, by calling in to try to get quotes and get insurance from these other companies, like making you feel like you're the idiot here. So he was paying $800 annually before the hike, okay, before the non-renewal notice. And the new insurance with way less coverage, even with triple the deductibles, because his deductible was $1,000 before, now it's going to be $3,500, is going to go up to $2,100 annually. So this is a personal account from one of my subscribers that doesn't live in a hazard zone either, anywhere, and is seeing their insurance rates more than double. In fact, he's in Palm Springs, California, so there's not much hazard there of anything. It's just extremely hot and dry. Maybe a flash flood they could get if they got a crazy rainstorm, but not much risk there. No wildfire risk. There's no trees or forests to be seen in the area. I was there last summer. It's just a big open desert. Now here's another comment that I keep seeing over and over again from a lot of people, guys. So it goes something like this. If the economy is so bad, why does the stock market and why does the housing market continue to go up? It's a fair question, and I'm not going to sit here and make you feel like an idiot, because a lot of people don't know the answer to this. And it's very hard for me to explain this. So what I'm going to do is I'm going to put up a clip from Adam Taggart's channel to have this whole thing get answered better than I could answer it myself.
And basically your punchline is they can keep, they being the tandem of the Treasury and the Fed, can keep this stealth liquidity going well enough through the election where you're not that worried about there being some sort of dire economic news that could look bad on the current administration getting up to the election, which of course is the goal of any sitting administration coming up to a presidential election. There's nothing unique about this. But you're basically saying they can hold it together until then.
In theory.
In theory, it does sound like you think at some point the recessionary forces are going to win out of this, whether just because they get large enough and enough time is allowed, or because the election's over and they take their foot off the accelerator because they don't need it anymore. Don't necessarily know what the trigger is going to be, but you do think at some point, correct me if I'm wrong, probably after the election, probability-wise, they hold things together until then, but at some point after, they can't, and those downward forces that you've already shown in the previous slides begin to really take effect.
You can only do it so long, but they can come up with another chart, another one. I face stage 3 in here too. The wild card in it is they don't control the world, nor do they really control anything other than interest and floating more debt. Things can break. We have the commercial real estate office complex in serious problems right now. And that's going to take the regional banks, and the regional banks are in serious problems. That's not an understatement. If you look at the $600 billion that they've got as unrealized capital losses, unless they hold it to maturity, and they can't afford those. So we have a whole series of things that are happening that can break this where liquidity doesn't make any difference unless it's completely targeted at the problem, as this BTFP was originally when we first had the banking crisis, starting to show primarily in the smaller banks and the regional banks.
So as you can tell from this answer, there are things in place right now that allow the government and the Treasury to keep this economy propped up indefinitely, at least through the end of this year, guys, in order to protect the election results, okay? This is not me saying this or me making this up. This is a real thing, and that's just the way it is right now. So one important realization that a lot of people need to have is that we almost don't even really have an economy anymore. Everything is very heavily manipulated. True price discovery on assets is basically not being allowed to happen across the board. And so you're seeing the price of everything continue to rise because it's all being artificially manipulated by all the extra liquidity in the system, as they mentioned. And I highly recommend, if you want to know more about this, to go and check out this full video. It's very informative. It answers this question basically in great detail with a lot of different nuances that I can't get into here. So I'll link that video down in the description if you guys want to look at it. But the short answer is all this stuff is going up because it's being manipulated. That's it. It's not that the economy is doing great. It's because the economy is not doing great that we have all this manipulation to make things appear far better than they are. And once you understand that, then you can kind of start planning a little bit better for your future. At least that's what I've been doing. Which brings me to the next point, guys. Another thing that people have been asking me a lot is this: Michael, please provide your top 10 picks of what your viewers should do to ride out this storm. What are your top survival tips? And this is something I've been meaning to get into. I just keep forgetting to mention it here. So here they are. I'm not gonna get into a lot of detail. If you guys want me to make a full video on this, let me know. I can go into more detail, but here it is. First of all, you need to get out of all debt, guys. All debt except for mortgage debt. If you have a low interest rate on your mortgage, even if it's 4 or 5%, that's still pretty good compared to historical averages. But if you have any other type of debt, credit card debt, auto loans, personal loans, HELOCs, whatever it is, get rid of it, meaning pay it off. That's the first thing. Number 2, save as much money as possible and have that money be earning interest. Right now is a great time to be earning interest in a high yield savings account or putting the money into treasuries. You can easily be earning 5% or more right now on those by doing nothing. Number 3, invest in something that you believe in. For me right now, it's gold and silver, guys. A lot of people think it's stupid. A lot of people think it's not a great investment. People send me charts about how the S&P 500 and the stock market have far outperformed gold and silver over the years. I don't care. You know why I don't care? I don't want to risk my cash right now in the casino that we call the stock market. Even though after watching this video with Adam, probably there's not going to be a crash this year. There's a reasonable probability you can still make money in the stock market this year without having to worry about a crash. But if you don't know what you're doing, you can easily get wiped out. But it's just not a risk that I want to take. And gold and silver are time-tested ways to save money, guys, because what it is it's real money. You're not saving cash, you're saving precious metal that holds its purchasing power through all the inflation that we've been going through. So I trust it to still hold its value in the future when I want to cash it out. Number 4, lower your living expenses as much as possible. That's pretty self-explanatory. Cut out everything that you don't need to be spending money on right now. Number 5, find a way to just make a little extra money. Don't spend it, save it and invest it like we already talked about. Number 6, have a game plan of what you're going to do if you were to lose your job tomorrow or you lost your income. Okay? You need to know what you're going to be doing just in case. Like, have a plan B, at least in the back of your head. You don't have to have a full-on, outline of what you're going to do, but at least start brainstorming it just in case, because there's been a lot of layoffs so far in 2024. Number 7, don't buy into the FOMO of housing or stocks, okay? Now that's me personally right now. If you want to be a gambler and you want to be investing in the stock market this year and try to make more money, same thing with investing in real estate, trying to squeeze more money out of that and flip properties, knock yourself out. I'm not doing it. I don't care if I'm losing money by not doing it, because I'm fine getting my safe return on investment right now with my gold and silver and with having the high yield savings accounts, okay? I'm fine with that because I can sleep at night knowing that that money is going to be there tomorrow, all right? But if you are the risky type of person and you want to YOLO everything away, go for it. I just don't think it's smart. Number 8, have someone to split the bills with, whether it's your roommate, your girlfriend, your boyfriend, your partner, whoever it is. Have somebody you can share expenses with, guys. This is a very easy one to do because you don't need to be in a relationship to do this. You can be, or you can just get a roommate. And having somebody there to pay extra expenses puts extra money in your pocket at the end of the day. Number 9, be on the lookout for new opportunities. I'm always doing that, and I guarantee you that when we hit this recession, not if, but when, there's going to be opportunity that's going to arise from it. I don't know what it's going to be, but there will be opportunity, because every single time the economy falters, there's opportunity in that. And there's also opportunity when things are going well. So there's always opportunity regardless of the state of the economy. And the last thing is, number 10, focus on improving your financial education. Whether it's here on YouTube, you're watching videos like this, or on other channels, whether it's reading books about finances, whether it's listening to podcasts, whatever you like to do, or get a personal mentor, guys. Find somebody that's already rich that you know and ask them how they did it and learn from what they did. Try to follow that path. Try to replicate their success. There's a lot of things you can do in order to get ahead in life, but it really comes down to your financial education. If you don't know what you're doing, if you don't know much about money, which it seems like a lot of people don't, otherwise we wouldn't see, these really stupid spending habits, then everybody would be better off. So people say I never offer solutions. Well, there you go. There's 10 solutions right there to digging yourself out of this terrible economy, or being ready when the shoe drops, because it's gonna happen. It's just a matter of if, not when. It could be another 10 years, guys. I have no idea. We've been talking about it lately because there's a lot of signs that it's gonna happen sooner than later, but that's not a guarantee or a promise from me. It's just a guess based on the current conditions. So always remember that. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't wanna wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.